Welcome everybody to our investor launch preview. Um, as you all know, we are very excited about our latest asset. We've been at this for 4 5 years now, and this is a first in a lot of ways. But before we get into that, I will thank Shiv Parekh, our founder and CEO, who also joined this webinar. Um, there's a reason we requested him to also be there is twofold. One is we have crossed a milestone of 300 crores of assets under management. Uh, Thank you to all the investors. A lot of you have patronized us, brought us to this place, and we just want to give you a heartfelt thanks. And Shiv wanted to do it himself. And second, this is the first asset for us in Bangalore, and we are hopefully launching it with quite a big bang. As you, a lot of you would know, we are generally a lot more conservative and as well as very particular about the tenant quality. And some of you may already know, but this webinar is just to sort of reinforce why this is a great asset, why it's a really good rare opportunity, and the third reason why it's also important. Since the last time we met, um, SEBI has formally approved the framework for MSME REIT. So we are going to get regulated now, and which is a great news for investors, first of all, and for us, because it gives a lot more structure. While we are already complying to, I think, almost everything that SEBI expects us to. But it does give us a formal stamp of authority as well as approval in terms of onboarding new assets in a much more organized fashion. So these are the three milestones since we last met. Hence, I just thought I'll mention. I'll just request Shiv to just share some thoughts on the new asset, and in general anything else he wants to give the message to for new investors as well as prospectively new investors. Shiv, over to you.
Thanks, Mihir, for that great introduction. And it's great to be here. I think for the asset launch webinar, we're very excited for this asset, Mihir. Obviously, like you mentioned, we've crossed our 300 crore in assets under management. That's great, but we're very excited to enter Bangalore. Finally, obviously, we've been at it for 4 5 years. I think what differentiates us to other players, and what definitely differentiates, what makes a good investor rather, is not what investment or what asset you say yes to. It's what investment you say no to. And we've seen over 10,000 crore worth of assets in Bangalore before saying yes to this one. And we're extremely excited for this asset, because of it checks multiple parameters that we look across. Whether it's tenant profile, the tenant here is in the top 30 largest companies in the world. Whether it's the micro market, this is in central Bangalore. Bangalore itself is an amazing commercial hub, and with central Bangalore, you can't go wrong. Whether it's building quality, it's a grade A building that's been over 99% occupied since its existence of the last 10 12 years. And the price that we're getting it at, the fact that it's below market value, below ready reckoner rate, or below circle rate, as we call it in Bangalore. So it checks each and every parameter. So we are very excited for this asset. Might just be the best one so far that we have. Mihir, I'll let you take over and take everyone through the asset, and then I'll join back in for the Q&A. Thanks, Mihir.
Yes,
over to you.
yes. Thank you so much, Shiv. And thanks to give that larger perspective and the hard work that you put behind to filter out and reach to this particular asset amongst a lot of them. And yes, we are lucky, as well as the hard work has paid off in terms of getting the right one. For those of you who are probably joining us for the first time or getting to know the concept for the first time, I would just love to just share a quick bit about hBits. Shiv, as you already heard, He's the founder and CEO. He's a Harvard, Stanford graduate. He started this about 4.5 years back. Our co-founder and CFO, Mr. Samir Bhandari, he's now fully helping us build this company, but his pedigree lies in core banking. He was the managing director and co-chair of global markets at JP Morgan, Nomura, and the likes, based in Singapore. And he shuffles between Mumbai and Singapore to take this company to the next level. Um, I'll just move forward. Yeah, that's a quick bit about me. I had investments here. I've been in banking and real estate for about 22 years now. Vikas is our CTO. He's been in the tech business for a long time across PharmEasy and a lot of other brands in the learning space. Um, well, the way we are going to go about is just a very crisp meet, because we want to keep more time for questions and answers, because we would like to have a conversation in that sense and address all your questions, because this is a great asset. There's already a lot of buzz and request for bookings of the early units. So we just want to keep it short so that we can address more questions. But let me do something. A lot of you are from Bangalore, but a lot of you are not. Why don't I spend a lot more time? Like, I'm not from Bangalore, but of course, from a workspace perspective, we have a lot of work going on there. But I would just like to spend 5 to 7 minutes on just Bangalore as a market, and more importantly, without getting too technical and without getting too detailed, I would like to spend on time on the valuation report. As you would know, we filter out properties various several parameters. One is obviously a good price. Secondly, a good location so that you can resell it in 4 to 5 years. And more importantly, the price analytics that we take from our partners like JLL, who are our valuation partners. Uh, I think it's important that we spend some time on understanding the location and why this asset is genuinely rare. Uh, First of all, the asset lies in the central business district of Bangalore. And I'm not going to bore you with making you read anything in detail, but I'm just going to cover some highlights of this valuation report that our JLL partners have provided and give you some just key overall snapshots of why this is a fantastic property. Central business district basically is Bangalore is mainly divided into three sectors from a commercial office space perspective. One is the CBD, which is the central business district. Then there is the secondary business district, which we call SBD, and then there is PBD, which is the peripheral business district, right? CBD, as it obviously says, it's the original place where all the action started, right? And there's hardly any supply. Any good property, whether it's a good rent or whether it's a good exit, which means a good appreciation after 4 5 years. Obviously, like all properties need to be in a good location, but not all of comparatively, there is always a ranking, right? CBD has the least supply, and I can't stress that enough. Least supply means, we ourselves in that sense, despite all our filtration, also got lucky because we need to get the property in CBD in the first place. Forget the right price or the yield and all that, because the supply is not there, land is not there, right? And that's why this property is first of all on a very low supply market. What does it tell us? It basically tells us that the resale is going to be awesome. um, we are already getting very good yields thanks to the great tenant, obviously a lot of other dynamics. And what I'm going to now do is just spend some time on just giving you an overall orientation, especially for our investors who are not from Bangalore, because it's important that they get a sense of what they are buying into. If you can see my screen, this is Bangalore is obviously in full circle, right? We have done a lot of properties in Bombay, where Bombay is a different geography. The orange area, which is the CBD, that's how little the CBD is, like any major city, right? And we are in the central business district, right? Just to give you a very simple sense, all new stock, office stock that is available in Bengaluru, only 3.5% is available in CBD. Um, and that's a stark reminder of how less the supply is. And one doesn't get these kind of properties very easily. Even if you have all the money and if you're not investing just through the fractions model, you hardly get the supply. And that's a great data to process. Also, the new stock that is coming through in Central Business District, as per this valuation report, of all the new stock, only 1.6% is part of the Central Business District, which goes to say that even if even if you invest now, it's not that there is millions of square feet coming through in the next few years, and hence there is a lot more competition for this property or any other property in CBD. There is limited land, and this is how it works. Any new property that comes is practically on redevelopment land or things like that, which is obviously slow. And why that's important is that all the top corporations, whether it's Indian or multinationals, their head offices, their main offices, they are always based out of CBD mainly, for obvious reasons. They have to attract talent, transport, and everything has to be relatively easy. And in every way, even from a sense of customer targeting and all that, it becomes much more easy. Right? And this, if you see this as at this statistic, the supply, absorption, and vacancy, overall Bangalore, the vacancy is about 17.5% across Bangalore. In Central Business District, the vacancy is just merely at 4%. Uh, Again, at the risk of sounding repetitive, it's because the supply is low. And this is one of the most important data points that one would like to see. The blue line, the light blue line, which is the highest line on this graph. This is the comparison of rental trends in commercial office spaces across Bangalore, right? And the average in Central Business District has gone up from, say, about 1995 rupees per square feet in 2015 to about 150 in 2023. That's a massive appreciation, right? And we all know post-COVID, work from home is now by and large just a hybrid model for a certain sector of companies and a very limited amount of non-client facing employees, right? Full office occupancy is back, and absorption also, whether it's leasing absorption or whether it is new office supply construction, everything shows the same trend that new and new offices are coming up because there is massive demand, especially in CBD. And essentially, what this slide says is that the appreciation on rent has been at a CAGR of about 5.5-6% every year, uh, which is great, right? And that's something that I wanted to spend time on. Um, Most importantly, and we'll share it later. Maybe I'll cover it when I've covered a little bit more about the location and the product. But we've done, as you would know, we've done comparisons of actual transactions, rental transactions, in the market through our through our agencies, through the registrar's office. Some of the top brands operate in this building as well as in this vicinity. So I just thought that I'll just spend some time on just the micro market, because as you can see, this is the overall Bengaluru city vacancy is 18.3% and CBD is 4.25%. It can't beat. So you can't get, I mean, the location can't get better than this. So I'll just quickly move to the slides now. Sorry for a quite quick detour. but I just wanted to make sure that we spend some time on the location, especially for our non-Bangalore investors, and why they should invest in Bangalore, first of all. Um, just give me a second. Yes. Well, so I guess most people won't get any prizes for guessing. For copyright, just as a disclaimer, for copyright issues, and we are professional at what we do, so we have to use not the direct names. But let me just of course here I can say, but we can't write. But that's why it's Japanese auto giant. No prizes for guessing. Just a quick cue. It's the largest automaker in the world, one of the oldest, as well as one of the two top ranked auto brands in the world, and that's Toyota. Um, and that's why we were very excited. This is the headquarters of Toyota Financial Services, which is a 100% subsidiary of Toyota Group. Um, they are here for 11, 12 years now. This is a renewal agreement. The office that we are selling is the registered headquarters of this company. They have spent their own money to the tune of a few crores in furnishing. That just gives a sense of more permanency and consistency. They have just recently acquired a floor above this floor as well, which is another good to have great sign of the long-term presence of this company in this place. Um, they have all obviously they are here. What for another main reason? It's not only obviously maybe a good rent or in terms of expansion plans they have, but also the fact that you don't get many large floor plates in the central business district, mainly due to not many big spaces available. And the floor plate that we are selling is about 24,816 square feet. It's one entire floor. And it's one of the relatively larger floor plates that is available in the market. That's another reason why there are multinationals in this company. Like Shiv mentioned earlier, the building has had occupancy of about 95, 96% over the last 12, 13 years of its life. Tenants have come and gone, but the occupancy overall has been great. Toyota, of course, is here for 11, 12 years. There is another tenant here called Smith's Detection. We all travel through airports. Wherever you see detection equipment is made by Smiths. That's another great tenant in this building. And it's obviously extremely well located. This is the product. It's a 9% entry yield. Mind you, getting the right price for a very high capital value location is difficult. And hence, getting the right yield is also difficult. Generally, anything above 6.5, 7% yields in this kind of an area is very, very difficult to get, especially with a very good tenant. Otherwise, why would the seller sell, right? But we have structured a great product here for you where it's a 9% entry yield. The IRR over 5 years will be 15.6%. The agreement is a 30 plus 30 lock-in. Um, the price, most importantly, is this 23% below the market rental. And why that is a great point is that, of course, the tenant has been here for some time, so they have had a good relationship with the landlords. Hence, they have contained the rent in a certain way as compared to the market, and which is also the reason why there is excellent scope for increment. Like I covered earlier, the rent per square feet here is 110 rupees per square feet, but the CBD rent overall average is about 150. Or rather, it's in some buildings it's 180, 190, but the average is about 150, and there's a clear big scope in reaching there. Um, yeah, the investment is obviously minimum as usual starts at 25 lakhs. This is just a quick snapshot on on Toyota Group. It's 86 years plus, $300 billion of capitalization, $270 billion of revenue, huge employee base. And of course, like I mentioned, the tenant is a wholly owned subsidiary of the Japanese auto giant with its headquarters in this building, Toyota Financial Services. This is the building. It's Vaswani Centropolis. It's a two basement plus G plus 6 floors. First floor is what we are selling, and the tenants have taken another floor on the third floor, um, which is, like I said, a great sign. This is just a quick look at the floor plate. Very large, nice floor plate, not too big, not too small. That's what works for the for such companies. This is just a quick facade. If you see, the lobby is very spacious, parking is very spacious, and obviously the open areas also in the building are quite nice. This is just a very quick insight into the builder. They have been around for 36 years. They have done a lot of commercial places to the tune of 8 million square feet in Bangalore. Just a very quick, while we've covered the location a lot, but this particular building's location, it's in Langford town on the Langford Road. The Langford town metro station, we all know Bangalore has severe infrastructure issues, and now it's getting better, of course, thanks to the metro station. And the Langford town metro station is just about one kilometer from here. It's slated to start in December 24. Why that's an important data point is access for employees to come here, to travel becomes much more easier. And it's very close to a double road. In Bangalore, double road, I was asking somebody, what does double road mean? There are very few roads in Bangalore where the vehicle moves both sides, and one of the double roads is close by. And the UB City, which is one of the most premium commercial spaces, is just 2 kilometers. The MG Road station is about 3.5 kilometers. And this is just a quick look at only one of the top few tenants in this vicinity in about 1.5 to 2 kilometers from here. There is Smiths, which I already covered, right in the building. There's Tesla, there is Apple, Microsoft, Lexus, Bain and Company, Bosch. All the good tenants are housed in this vicinity in various, a lot of these buildings, right? And our building is one of those central business district commercial office spaces. This is just a quick look at, what is the discount. As you all know, I've already shown you the valuation report, but this is just an excerpt from that. And this is real data. The market rental is 143 per square feet, and we are doing it at 110. If you see, a lot of other companies here are paying much more. Obviously, some of them are in different buildings and things like that, but it gives an entire range and scope of the rent that can go up over a period of time. And obviously it only goes to show that it's going to be one of the most premium commercial assets that you would have in your portfolio, not just for us. For us also, it's probably our best, but it's needless to say, even for you all, this is going to be one of the better ones. This is just a quick look at the terms. It is 30 plus 13 months. Lock-in period is 24 months. So each agreement period is a default lock-in period. The escalation is 4%. The chargeable area is 24,000. CAM is 9. And the annual rent of that property earns currently is about 3.5 crores. It is going to reach 4 crores at the end of 4 to 5 years. This is the asset value totally is about 55 crores. The cost of the property that we have secured is only 18,391 per square feet. And that's a big, big, big one for a simple reason. I'll go back to my original point. When you want to exit the property at a good price, there are two ways to do it. One is obviously rely on the appreciation of the property and the location in the market. That is one component. But one big component that one doesn't get lucky all the time is you get the price at discount. You buy the property at certain discount. You can get it at 5% discount. You can get it at 10% discount. It depends on how you negotiate and how lucky you get, right? But we are clearly at a double-digit discount to market. Like she already mentioned, we are below market rate. The market rate is about 21,000 per square feet as per the valuation report. And we have negotiated and locked the price at 18,391. which means your appreciation after 4 to 5 years is actually already almost secured, because you are not buying at the market rate, you are buying it below the circle rate. And hence, obviously, the yield is also good, right? But the exit is almost secured at a very good price. Uh, Unless, of course, you all don't want to exit after 4 5 years, because we are going to ultimately take your consent before we resell the property after 4 5 years. But the thing about good properties and good tenants is this, right? Especially if it's a good price, it's a no-brainer. It's like a secured asset, a secured income. All signs show that the tenant doesn't really want to move out, and in fact wants to expand. And top it all at a lower than market price is obviously a great thing, right? So, like I said, this is a sensitivity projection, which in simple terms just says that the expected appreciation over year on year is 4%, 6%, 8%, and 10%. The investment multiplier is 2 times. So essentially, we hope that including the rent, you double your money in 5 years. Um, and I think that's about it. And I will put a stop to this. The rest is all about the process. And as we all know, but I'll quickly cover it. If you are interested to invest in it, you have to just sign a digital EOI. I would just like to cover two most important points. Uh, we started this trend in our last asset, which is the tech MNC in Goregaon, Mumbai, which is also obviously fully funded now, and our investors are earning returns. We have continued the trend of offering an extra 1% to all our existing investors. You just have to invest. We have formally launched as we speak. So you'll be able to invest digitally. Most of you know how to go about it, but you can go on our website, do your investments, your expression of interest signatures. Uh, as we speak, it's gone live, and you will be able to sign up your interest in this immediately. I would urge, don't just invest in 25 lakhs, go for a bigger amount, because you don't get these properties very easily. And we are giving an extra 1% for all our existing investors for all digitally signed EOIs up to 1st March. You have one whole week from now, keeping in mind the fact that you need time and funds. Of course, you just have to pay 5% right now as per our usual process. But I would sincerely urge, go for a bigger amount. This is a no-brainer property. You need to make much more rent from this. You can't get a Toyota-like tenant every other day. We are stressed about our next asset, because we don't know after the benchmark of Toyota how do we get a better asset, but we'll get there too. And please, I repeat, 1% extra for all our existing investors who are already investors with us, irrespective of whatever investment that they have done or they will do. They will get extra 1%. It just makes it much better. As in Hindi we say, "Sone pe suhaga." You are actually earning 10% yield for the first year, and your average yields will go up way above 8.5% with this extra loyalty offer that we have instituted for our investors. So I sincerely urge that you avail of the offer. Do reach out to our team, and happy to take questions now. I maybe overshot my time by 5 minutes, but happy to take questions now.
Great, Mir. Thanks for that
Yeah.
great presentation and taking everyone through this asset that we have. I think a lot of questions have already flown in. Uh, First from Ajay Manskani, why did you get this at a low price? I think that's a great question. Like Mihir mentioned, Toyota has been here since 2011, and they have a pre-existing relationship, so they were able to, get a low rental, and because of that, the to at market yield, we're able to get a low capital value. I think the other point, which is very important, is that when we got this asset, I think this speaks to the speed of, as soon as we got this asset, the very next day, our team, couple members of our team flew right to Bangalore to have a meeting with the seller of the asset. So we made sure that as soon as we got this deal, we were there on the table negotiating with the seller of the asset. And then what's great is, given that we've done work with some good developers in Mumbai, here it's part owners Vaswani, they are selling to us. They got good comfort with us. They wanted to sell through us, and that's how we're able to crack the deal. So that's the story on that. Question from Suraj, and this is a slightly long question, but a very good question. So I'll paraphrase it. Suraj is an existing investor at hBits, wants a little bit more light on the calculation. How exactly does the capital appreciation work? Is it on the entire acquisition cost? Yes, the capital appreciation is on the entire acquisition cost, and we do consider it on the entire acquisition cost. Yes, there are components to the acquisition cost that includes the legal fees, the advance tax, the stamp duty. That's an outflow for the investor. But given the price that we're per square feet rate that we're picking up this asset for, and the rental, right? What Mihir was mentioning, the rental is about 110. As per our analysis, market rental is 143. As per JLL, market rental is about 150. We are confident when the term expires to get a significantly higher rental, whether it's from Toyota or another tenant. Given that, when the term expires after 5 years, you're able to achieve a much higher rental. That's when you're able to then achieve the capital value that we are projecting in 5 years. And that's really the play here. So yes, there are components to the acquisition cost that don't technically appreciate, but ultimately it's the yield that you get on the rental in year 5 or year 6 when we look to exit. That's when you get your IRR. Question from Anshul, or two questions. Is the rental increase percentage not fixed in the contract? No, it is fixed. It's 4% yearly rental in escalation. Also, what does a 30 plus 30 month contract mean? How is it different from a 60-month contract? This is a great question. And here, this is in favor of us as the owner, and I have to give credit to the current owner slash the developer for negotiating such a good term. So generally, when it's a 60-month contract, you as the landlord are locked in for the rental for 60 years. For 60 months. However, in this case, given that it's 30 plus 30, after 30 months, you as a landlord have the option of telling the tenant that, hey, this is the market rented today. So you can effectively renegotiate the contract after 60 months and get the higher rental, which generally isn't the case in a 60-month contract. This question from Nirav, do you have any exit plan? So we look to exit in about 4 to 6 years. Ultimately, what's important in exit is entry. And given the entry price that we're getting it at and the quality of the building, in 4 to 6 years, once the rentals appreciate and escalate, we're sure that we'll be able to get a good exit. Obviously, as Mihir mentioned, ultimately it's up to the investors whether they want to exit or not. Who are the other tenants in Centropolis? Yes, this is a very important question. It gives some sense into what kind of occupiers there are in the building. So not only is Toyota a tenant, and as a Japanese player, Japanese are very, very careful to move, to make any business decisions. In fact, they are, in fact, one of the slowest, and it's known worldwide that they're the slowest. But once they make their decision, they are there, and the trust is built. But yes, other than Mihir mentioned Smiths is there. There's Coco Blue. Swiss Ray was occupying for 9 years, which is a Swiss MNC. And then there are a few managed office players as well. Simply Work, Stable Space. So those are a few of the other tenants. Question from Awais, if I pronounce that correctly. What is the net rental yield? So after 9%, we charge a management fee, so net will be 8%. The exact calculation the RM can share with you depending on the amount that you're investing. And we'll be sharing the financial model after the webinar as well. Question from Neerav, rentals are advanced every month or after a month? Rentals are advanced, and then they'll be paid to the investor by the 15th of that month. There's a question, how does the rental yield come out to 9% given, rent is 110 and purchase price is 18,000. So we obviously offer a rent top up in the first year because we found this a very attractive capital value. So we wanted to get in and acquire it, and that's how the rental yield comes to 9%. Detailing model will be shared after the call. And so you can study that and ask any questions that you have. Similar to Anurag, the year-on-year yield. So Mir, average yield is about 8.5%, right? So that would be the average
Yes,
yield for a 5-year
correct,
period.
correct. And for a 25 lakh amount, maybe I'll just jumping to the next similar question by Awais Daimi. If I pronounced it right, what is the net rental yield and how much rental money gets credited to my account for 25 lakhs? So it's about 18,600 rupees per month for a 25 lakh investment. What our investment managers will do is share with you the detail, whether you invest in 25 lakhs, 50 lakhs, 1 crore. In fact, we can share the whole Excel modeling so that if you want to try and test whatever amounts you invest, what you get every bit of outflow and inflow in that in terms of what are your cost expenses as well as income.
Great. Perfect. Thanks.
Yes.
Does the company own the property? So currently the developer owns the property and we'll be buying it at this discounted rate. Yes, Smriti, we will be sharing the PPT and model after the presentation. Next question, can NRIs invest? Absolutely, NRIs can invest. In fact, 35% of our customers are NRIs. They come from across the world, Middle East, Southeast Asia, Singapore, Europe, US, and Africa as well. So, I mean, they're Indians all across the globe, and they're Indians all across the globe investing through us. Question from Pradeep, how does the tax work? So, the structure, I'll just give a little insight on the structure for newer investors. Every asset is in a separate private limited entity, and investors get shares and CCDs in that private limited entity as per the amount that they've invested. So whatever rent is flowing into that private limited entity is paid out as interest in CCD. So the rent effectively is interest in the hands of the investor, and it's taxed as per your income tax bracket. A lot of our investors invest in family members' names that are not income earning to save on that tax. And then ultimately exit will be by way of sale of shares and CCDs. So there you'll have long-term capital gains with the benefit of indexation. So long-term capital gains today for unlisted shares is 20%, and you get the benefit of indexation of 5%. Our model does explain this in detail, and for queries on this, you can also ask your RM. Question on 30 plus 30 agreement did explain that. When can we expect rentals in this asset? So we have a lot of interest in this asset. We expect to close it very soon. So I think hopefully by April, rentals can start coming in. Question from Krishna. Now, since the rent is locked as per the LNL, how can we expect increase in rental yield to meet the average CBD rent? It's a great question, Krishna. And I think this is what a lot of, non-savvy real estate investors don't realize. But basically, after the agreement period ends, right, after 5 years end, is when we look to get the higher rental. And that's the perfect time because we are getting in today. In 5 years, when we renegotiate, we'll get a new contract, higher rental, new contract, higher lock-in, and that's when we can look to sell the asset. And that's where, the investors also have to look at the ability of the platform that they're going in and their ability to, re-rent the property, to negotiate the contract. And I think that's where I'd like to say that we have a good amount of experience. We've come from a pedigree of having 30 plus years of experience in commercial real estate, development and leasing. Across our, pedigree, we have tenants like ICICI Bank, Mane, Genico, Tata, DHL. So, that speaks to our ability to get good tenants. We have great connects with HR heads, admin heads. One more point is that during COVID, we had 100% collection in rental, 0% delay, because we know what it takes. We have very strong contracts in place as well. And we study the leave and license contract before getting in. And this is something that we notice in this contract as well, the very strong leave and license agreement. So we'll do the same when we release the property. So it makes it sellable in 5 years and makes it sellable at a good price. I would like to know the partners of hBits as an organization. So if I understand this question correctly, JLL is our valuation partner. Most importantly, we work with Shardul Amarchand Mangaldas to get the legal due diligence. We work with PwC and Deloitte for any tax structuring, and CRE Matrix to get all our datas. Question from Pradeep from gross rental, how much fees will be deducted? We charge a 1% yearly fee. A question from Tawkir on the 1% discount. Mihir, if you want to answer that question.
Well, yeah. So, Takir, basically, what we, like I mentioned quickly, we've started sort of appreciating our existing investors who've sort of invested with us, and more are joining in last asset and again in this asset for a very, very limited window, which is about a week. We are giving an extra 1%. You can call it a discount or an extra yield, whichever way you look at it, but that 1% of your investment value, whether you invest 50 lakhs or 25 lakhs, 1% of that comes back to you immediately after the asset gets registered and we start giving the rent. It's our way to increase your yield effectively, and in fact take it beyond just 9%. um, and yeah, I hope I answered that question.
There's a question on how the real estate ownership would work. So yes, like I mentioned, every asset in a separate private limited entity, investors get shares and CCDs. How is the investor protected where the tenancy is not 100%? So no, it's a great question. This is where the investor has to look at, who is a tenant, what is their logic for being here, how long have they been here, what kind of investments have they done in the property, how long is the contract, and if the tenant were to leave after all of that, what is the ability of the manager to release the property? And I think we look to answer all those questions before we get in and even present it to the investor. So in this case, Toyota has been there since 2011. They've in fact taken an additional floor. They've re-signed the contract recently. They've refurbished and refitted out the office recently. Um, and they signed a fresh agreement last year. And after 4 or 5 years, if Toyota is looking to move, which is unlikely, in fact, if you look at the Toyota Financial Services website of India, you can actually see this is their registered address. It's on their website. This is a registered website officially with the ROC as well. And then the investor should look at the ability of hBits to release that property. Question from Nizam and from Smriti, which is a similar question: age of the building and how do you consider the exit given the age? So building OC was received at the end of 2010, so about a 13-year-old building. But on the exit side, see, I think the what price you're getting it at today versus the market price is what one should look at, not what the age of the building is. As long as the building has been well maintained and facilities are in place, and that's why you have tenants like Toyota, continuing to occupy the building and Smiths occupy the building because they're getting the good facility. As long as that happens, you're going to get good appreciation. And there are dime a dozen examples. I mean, even if you look at the residential real estate sector, and you can consider buildings that were constructed in 1970 and 1980, they've seen significant appreciation, across markets, across cities.
Shiv, I'll just jump in on one
Yeah.
question, which is a little more basic, but maybe they're one of the new investors. So I don't want to misunderstand explaining their concept. So the question from an anonymous attendee is, can you please explain in detail how the real estate ownership would work for the investor? Also, how is an investor protected in scenarios where the tenancy is not 100%? So very, very good fundamental questions. I'll quickly try to address them. So basically, like she already covered, we create a special purpose vehicle, which is a private limited firm, where you get an equity share proportionate to the amount that you invest with us, whether it's 25 lakhs, 50 lakhs, 1 crore or more. And that is the one part. So the entire investment value is split into two parts. This structure has been created by Deloitte, who's our structuring partner. 10% of the investment value goes towards equity shares. 90% of the investment value goes towards compulsory convertible debentures. So the SPV owns the property, you own the SPV, and the CCD is issued so that you can get rent in the form of interest. From a paperwork perspective, you have given debt to the SPV to buy the property. I just maybe rattled off very fast, but I hope in the interest of time, I just thought I'll explain you how every money gets accounted for and how you own the property. You own the property through the SPV, and obviously when we want to resell the property, we come to you with the proposal, with the right valuations, and with majority consent. We resell the property because you are an equity share owner. Till that time, the CCD is your financial instrument through which you earn the money. I hope I was able to answer that question. Um, yeah, Shiv, sorry, you
No,
were.
thanks. No, great, great. I think there are a lot of questions rolling in, so I'll cover a
Yeah,
few. I think there are a
sure.
bunch of questions on the structure. Yes, you can invest as joint holder. Companies or HUFs can invest as well, Anurag. TDS for NRIs. So TDS is as per the country that you're based in, and then there's a um, you'll have to sign a tax declaration certificate, so you can get the lower rate of TDS depending on the treaty between the country that you're based in and India. Demat account. Right now we are working with the physical shares, so not required. Similar question for Tokir on NRI's TDS, how it works. Again, depends on the country. You can get the lower TDS as long as you submit your tax residency certificate. Question from Roshan on LLP structure. We are whether we are exploring that. We are much more comfortable with the company structure because it gives much more security to investors. It's an independent structure. An LLP structure, yes, there will be tax at the LLP level and not in the investor's hands. So then there's the level of tax at the LLP. What about the rentals after 4 to 5 years? Is it going to increase? Question from Karthik. I mean, we expect overall rentals across good markets in India, and Bangalore being one of the highest of them, to increase. In fact, there was a recent article in one of the top papers because of a research report put out by Colliers that the amount of GCCs, global capability centers in India, has dramatically increased in the last 2 years. So just to give an example, what do I mean by this? About 70 to 80% of Indian office occupiers are non-Indian companies. They are MNCs, whether it's US headquartered, European headquartered, or Asian headquartered companies. Those are the primary occupiers of real estate. Now, what's happened post-COVID is that in India, work from home hasn't really been a thing. People have moved back to office, but in Western markets, Western players have realized that if during COVID, because they were working from home, the certain roles that were outsourced in the US were people working from home in the US. Now they can just outsource that to India. So basically, the outsourcing and servicing industry has seen a huge pickup post-COVID because of this move by US players, or rather just global players. And that overall just increases rents in India. The other thing to add is that all these players look at office real estate in a dollar per square feet basis. What is the office costing me on a dollar per square feet, not in a rupee per square feet? So as the rupee depreciates against the dollar, for them, the real estate just becomes cheaper in India. There's a question from Smruti. Focus of existing MNCs is ORR and beyond. Yes, ORR is a very good market, but it's a different type of occupier, a different kind of purpose, and a different kind of reason. The reason for Toyota to be in the central business district of Bangalore is ease of connectivity to various areas within Bangalore. A lot of these service centers, IT service centers, those will be in ORR. So obviously it depends on the kind of occupier that you have. There are a few questions on taxation again. So yes, you will pay taxation on your income tax slab. So, or do I get long-term taxation benefit? So it's a combination of both. Your rental income, which is transferred as interest income, that is on your income tax slab. But your appreciation, when you sell your share in the property, that's long-term capital gains with the benefit of indexation. Question from Nizam, is this an A-grade property? Absolutely. You won't have tenants like Toyota occupying a non-A-grade property. What is the new micro REIT framework? So this is the new MSM REIT framework, which should be coming shortly at any time now. It's been, in the last board meeting of SEBI, SEBI said we're going ahead with the MSM REIT. We're just waiting for the final detail of the framework. Farnish, you've joined a bit late. Our RM will be in touch with you to take you through the presentation, and we'll be uploading this webinar on YouTube, so you can go through that later as well. Can you please tell us how much the rental increase in past renewals with Toyota? So generally, it's been this consistent increase in the past. Obviously, in 2015, there was a slight hike, and the detailing we can share with you. We can dig that up and share with you after the call. Once the registration is done, how long before the rent starts accruing? Once the registration is done, you start accruing rent from day one. And then we'll pay it out idly on the 15th of that month. And if we are registering it too close to the 15th, then it'll accrue and be paid out on the 15th of the next month. Because there's just a little bit of, sometimes operational hassle of switching who the tenant has to pay to. But from day one of registration, the rent does accrue. Question from Siddharth, when some shareholders want to sell and other shareholders don't want to sell. So individual shareholders can sell their share on the platform at any point in time that they want. And we've given exits to investors within 30, 45 days. Someone had a medical emergency, they wanted to exit. However, appreciation generally kicks in after about 5 to 6 years, after you're able to sign a new contract at the escalated rental. At that point, 75% of shareholders, if they agree, that's when we exit. Otherwise, we continue owning the asset. Does the investor need to pay TDS? So TDS will be deducted, and that's then refunded at the time of your tax return filing.
Shiv, there's a question from Siddharth on how do you resolve the situation where some shareholders want to sell the property?
Yeah, so that's what I just mentioned.
Okay. Right.
75%. Otherwise, we continue
70%,
owning the
yes.
property. Yeah. I think there are a lot of questions that are coming in. Is it a large workforce for 4,000, 5,000 people out of the office? It's not 4,000, 5,000. It's 20,000 square feet that Toyota's occupying. And generally, it's about 100 odd square feet, 80 odd square feet in these CBD locations per person. But so yeah, there will be in the thousands. That will be kind of the occupation, Praveen. I think, Mihir, we've reached the end of the presentation. The questions will keep flowing in. There are a few questions that are repeating, and we've not been able to answer them. But please be in touch with our RMs. They will be in touch with you as well. Mihir, over to you.
Thank you, Shiv, for addressing all the key questions. And thank you, investors. I would just like to repeat, first of all, thanks again for sparing time, valuable 1 hour of your weekend, and taking interest in our property. For all existing investors, you have an extra 1%. Please avail of it. It's for a period of 1 week from now, which is up to 1st March. Most importantly, I would urge, don't go, if you are investing, go for as much as you can. Don't just stick to 25 lakhs because you don't get to own a Toyota tenanted property very often. So go all out and block your funds towards this property. I hope we've been able to answer most of the questions. Even if we haven't, our investment managers will be in touch with you. You will get all the information. We've tried to make it as simple as possible in terms for you to, and without getting too technical, we've made it very simple, 1-pagers for you to understand what the property is all about and what are your investment returns like. We've also made a video of the property at the site, so you get a broad sense. Our investment managers can share the property site videos as well. And most importantly, don't earn this income alone. Please refer clients to us. I'm sure others also who are sitting on the fence to invest in these kind of hybrid but clean and clear products are waiting to get these kind of opportunities. Please refer our friends, family who would like to be joining hBits in this journey. And thank you so much. Thank you to the hBits team to organize all this. And have a good weekend to all of you.
Thank you. Thanks, everyone.
Bye. Thank you.